There is no bull market like a gold bull market because it's predicated on fear. So if at the same time you see the mints run out of product, you're not going to see the public rushing to sell their only form of or their first line of protection. In fact, they're going to hang on to it tighter than ever.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals, and he's joining us this Tuesday, August 10th, 2021. So, Andy, thanks for coming back on.
It's good to see you, Dunnigan. Thanks for having me.
We are in the middle of a fairly frustrating search for a relocation property here in Central Florida. We're finding either places that have been multiple bids. We had one place we were trying to put a bid on. The selling agent said they already had 4 bids in and didn't want any more. Another one that we put a bid in got overbid. Other ones we looked at are just really, really fixer-uppers, and they said it's a tough time to be buying a fixer-upper because it's hard to get materials or crews. So we're scratching our heads here, but we're still looking, and glad to have you back in here, cluing our audience in on having already made your Florida move, but also what's going on in the metals market. If we could first kick it off with this big smackdown on metals prices that happened over the weekend and the first part of this week, people are scratching their heads wondering, gee, what's the story? Why are metals down 10% or more just in the past week? So could we start there with this metals smash and let us know what you're seeing and hearing?
Yeah, well, I mean, it's very reminiscent to what we saw February 1st and 2nd when 1.5 billion ounces of silver were dumped onto the market in the middle of the night, specifically to affect sentiment, not to give whoever was selling that silver the very best price. Same thing happened here Sunday night in the access market. As London closes and we transition towards New York Open in this little sliver called the access market, where you basically have a very, very, very thinly traded session, someone dumped 2 million ounces of gold. And you know, you're talking $4 billion worth of gold dumped at the most inopportune time, specifically done to affect price and sentiment and narrative. And no one would do that. That trader would be fired, hunted down, and shot, and maybe not in that order. That is not how it happens. No one would ever sell enormous quantity of contracts to like 20,000 contracts in order to, or was it even more, like 40,000 contracts? It was 2 million ounces. Whatever it was, no one would dump that amount of metal on the marketplace when no one is there to take the other end. And even if you had the greatest conditions of all market conditions, you would slowly sell that over a period of time to maximize your best price. Instead, it drives the price straight down as it hits New York. And what happens is they drive it down below the 200-day moving average, and boom, 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 it just starts to spiral. You get all of the non-emotional, algorithmic black box programs that trade so many of the funds out there that say, oh, it's below moving averages, sell. And that selling begets more selling. And it's done specifically for effect. I know it gets old hearing that, but the reality of it is that it's very obvious that this is the case. There is no rational-minded trader on the planet that would ever sell that kind of product in that market without specifically doing it to drive the price down. No one who was motivated by profit would do that, ever. Instead, they're motivated by a changing of rhetoric and of sentiment, freaking people out, getting people to be, shake them off the tree one last time. And I think that these efforts are losing their strength, because what we see, whether it be in early February or right here, and you'll attest to this, is a massive amount of volume, because people listen to you and others out there who are telling them that this is make-believe, that, look, this isn't how it works. No one's dumping this kind of product in the middle of the night. It's done specifically for a reason. It's a subsidy. And I think people need to look at it that way. And that is the way that our clients look at it, and yours. The volume, the order volume goes exponential when we see these types of irrational, counterintuitive smackdowns that I believe are losing their strength, their efficacy. I think that they are moving to a place where people are seeing it for what it is and look at it, as they should, as a subsidy. And when you factor that against the lowest premiums we've seen in 18 months, honestly, this is the best buying opportunity I've seen all year, not only in price, but in premium and in immediate availability. It's a gift.
One of the things you mentioned there about the subsidized pricing, it can't be lost on those who have the deepest pockets that availability of subsidized pricing is benefiting them as well in the ability to acquire physical. Related question here from Matt Hauser. What do you think are the most impactful events coming for precious metals in the next year or two? And specifically, why hasn't silver seen a return to its high of $30 from last year? That environment of not being near highs but being at these subsidized prices may in fact have something to do with it, but I'll let you answer that question from Matt.
First and foremost, it's exactly what we talked about. It's shorting and selling on COMEX by the commercial banks, and that stays in place until it's gone. I know that doesn't really make anyone feel warm and fuzzy, but look, the only way that you can successfully manipulate a market to this extent over an extended period of time is to push it in the direction it's going. When you have such an amazing amount of physical demand, this has to end at some point. And maybe that's what these big flush outs are trying to attempt to do, to shake as many people from the tree as possible, to reposition long by big money and then let it run, because the demand is off the charts. And when you look at something like silver, it's got massive demand industrially as well. When you look at gold, it's tier one, and it's being massively accumulated by the commercial and the central banks. This will change. It's just a matter of when it changes and what is the fuse that lights the reversal in course. I think that the price of silver should be massively higher, and I understand why he would say that. I think it does ultimately goes much, much higher based upon a supply-demand fundamental that has to catch up with reality. If it's coming out of the ground at 7-1, but it's being valued at 70-1, or 72-1, at some point it has to meet up with its natural mean, or all of the paper manipulation becomes moot if you cannot deliver. And that's what's going to happen. At some point, no one will be willing to sell physical for these ridiculous prices. And until that happens, you have to look at these knockdowns as an opportunity to get longer at subsidized prices. What will that seminal event be? I don't know. But I'll tell you that this world seems to bring these types of seminal moments more rapidly and more frequently than we've ever seen. So for me to try to guess what that moment is, look, I would have told you that the reclassification of gold or the Belt Road Initiative or any of these, the massive drawdown on COMEX, all of these things should have very large impact. When you see a country that is flirting with maybe even going back towards lockdown again, it's an environment like that where you see the Fed juice up the printing press again, keep interest rates low, continue to buy assets at $150 billion a month clip or more. One of these things will trigger the domino. It's just a matter of time. And if not, we'll be really, really lucky to have gotten out of this mess by the skin of our teeth. So I would venture to say something, and probably something unforeseen. And I don't mean to take the easy way out, but it seems like every seminal moment that we see is something that we never would have counted on or foresaw just days or weeks before.
Yeah, if it's the ones you could have foresaw, those are already priced in most cases. Mark Foys asks, Andy, would you recommend holding on to your silver given the recent times?
Yeah, I for sure would. One of the things people can do right now is if they bought silver at much, much lower prices, is they can sell it back to us. Now here, the tricky part with this deal is that it has to change custody, right? They'd send it to us. If it's in a storage facility, we can actually just move it to our account and then back and sell it back at a modest 2% spread between selling and buying. This is called the precious metals tax swap. It's legal. You can do this as long as custody changes. You sell it to us and buy it back. Now, what this does is it establishes a new basis point, and you can write off capital gains with a capital loss. Even though it's the collectible rate, there is a small switch where you could sell a second home as an investment property with a gain and write it off against the loss. At the same time, I would say the likelihood of the new Biden tax proposals enacting much higher capital gains rates. This would enable you to lock in at a lower capital gains rate and a higher basis point. Without question, I would not sell your position right now in silver. There isn't a finer investment backdrop on the planet, as far as I'm concerned. Yes, I've said that for a while, and the little boy who cries wolf, I always say, sees the wolf at the end of the story. I'm not trying to tell people that look, I haven't been right that the price would take off, but I will ultimately be right, because the biggest money in the world would not go to such great lengths to accumulate it so copiously if not for rising prices down the road. And in an asset that is depleted in nature, that is growing with use cases as fast as can be, ultimately will express itself in higher prices. To sell it now would be the worst possible thing. To take advantage of opportunities like a tax swap or trading gold for silver at these ratios, absolutely. And to sell it right now would be a shame. And where do you even put your money to find anything remotely close to the value you find in silver right now? I don't think you'll be hard pressed to do that.
I think El Plata is asking a question that a lot of our viewers want to know, and you've shared some about this on multiple visits with us, but maybe you could just touch on it again. What does Andy personally own? Percentages, perhaps, of metals or forms of metals, or if not the specific product? How often does he buy for himself?
So as I've often said, in 1990, 89, 90, the February of 1990, I started with my father, and the only rule to me, or he'd fire me, was to buy something every 2 weeks. And I've owned the company as 51% owner for a long time. I'm the president of the company. I've continued to buy every 2 weeks. My dad won't fire me any longer, but I've honored my promise to him for 31 years. I buy every 2 weeks, always. I've never missed ever a 2 week period ever in 31 years. I buy something. I've always been a gold bug. I started accumulating gold in the early 90s, and it was $200-300 an ounce. So I was able to put away an awful lot of gold over the years at really low prices. But over the past few years, I've been buying mostly, if not entirely, silver whenever I can. I have coins coming out of my ears, so lately I've been buying 100-ounce bars. For people who don't have much of a position in coins, I would suggest buying coins first. I think you want that utility, you want the flexibility and the versatility. If you have a fairly decent position in coins, I love the 100-ounce bars, because I think it's important to weigh the savings versus the loss of flexibility. And in my mind, the best choice for most people would be coins, and it's what I have focused on. 95% of my acquisition is in silver coins. There are 6 major mints in the world: United States with the eagle, Canada with the maple, United Kingdom with the Britannia, South Africa with the Krugerrand, Austria, the Philharmonic, Australia, the Kangaroo. Those are what I focus on primarily for my coin purchases. Some of those mints will make specialty items like the Kookaburra from Australia, or the Call of the Wild series in Canada. And so I like some of those too, but I stick with those 6 major mints. And then I also like 100-ounce bars. But look, there's no right or wrong way to do this. There is no established protocol. But I think the one key point that I would try to make to people is don't cross the penny wise, pound foolish threshold. Don't buy something that is so big that you lack versatility only to have a very minimal savings. If the savings is extraordinary, like in our 1,000-ounce bars right now, you could argue the savings is commensurate with the loss of flexibility, because it is a good savings. You're saving $2,000 roughly per 1,000 ounces. But if it were any tighter than that, I would say absolutely not. You want to maintain flexibility. You can have the greatest thing in the world done again, but if nobody wants it, what good is it? And that's not what you want with your metals. You want that liquidity, that flexibility, that utility. So in a nutshell, I would buy gold and silver from those major mints. And if I'm buying, bars or rounds, there are a few good mints to choose from. The Pam Swiss mint is a fantastic one. Obviously, the Belcambi mint is a fantastic one. Any of the Swiss mints are fantastic. And the Australian Perth mint and the Royal Canadian mint also make 1 ounce gold bars and 100-ounce silver bars. So there are a lot of things that we can find, but stick with those major mints or reputable companies that produce the rounds and bars, and you'll be fine no matter what you get. That's for sure.
You mentioned in the past, you've talked about how we get questions sometimes about how much buyback activity, how many people are selling metals back versus, and you say in the current market, very little. But Mike Salmon, looking into the future, says, just wondering what Miles Franklin and Andy will be doing if the government puts the brakes on silver and gold, or it's not available because of price or not obtainable. So in an environment where our supplies from mints would be constrained, what other market dynamics do you envision happening in the future?
Good question. We came real close to that reality in 2008, and again, when if it weren't for David Morgan calling me and saying he had a buddy in the medical device industry who had been stockpiling silver on the back end of x-ray machines for the last 30 years, a company called Pyromet, and he wanted to offer 100-ounce bars to the industry out of necessity. David went to him and pitched it to him because there was no metal to be found for the whole second half. Right about now, this time, right here where we're in August, everything was gone. Everything. U.S., Canada, Austria, Australia, South Africa, U.K., they all had nothing. The Perth Mint was shut down the whole second half of 08. The Rand Mint ran out of product in August of 08. And all the other mints were 12 to 16 weeks backordered with massive premiums. And I would lay in bed at night and stare at the ceiling and say, what the heck are we going to do? I can't get anything. I was a U.S. Mint representative in 08, and the U.S. Mint wouldn't sell me anything. And they said, we'll let you know when you can. And so it was an environment where I wondered what the heck we were going to do. And that would be a bummer. If we couldn't get any product, what would we do? Well, we would continue to work our storage program and be there when people wanted to sell for as long as we could. But I will tell you that in an environment, as you and I have said, maybe the one single thing more than anything is quoting Rick Rule, where he talks about 0.5% allocation to the metals right now. And if we regress to the 2.5% average of the last 40 years, or go back to where it was in 1980 at 8%, which would be a 16-fold increase in demand overnight, there'd be nothing for anybody. And the reason they say there is no bull market like a metals bull market is because it's predicated on concern, not on greed. It's predicated on fear. The higher the price goes, or even if the price is falling in the backdrop of a world getting crazier by the day, people's grip on their metal is tighter every day. No one sells until the environment comes where there are real opportunities. You see, in my mind's eye, when do I sell my metal? Well, sometimes I think maybe never and give it to my kids, but it's not just for an emergency, it's for an opportunity. Maybe it's blue chip stocks selling at single-digit price to earnings, paying a 7% dividend. Maybe it's real estate selling at pennies on the dollar. Who knows what the environment is? Or U.S. Treasuries trading at 9% like they were in 1990. Who knows what it is that makes you want to make that shift? But there is no bull market like a gold bull market because it's predicated on fear. So if at the same time you see the mints run out of product, you're not going to see the public rushing to sell their only form of or their first line of protection. In fact, they're going to hang on to it tighter than ever. And those types of realities are plausible. What would we do? Don't know. Hope it doesn't force us out of business. But in reality, those types of what ifs, I guess, in a far off recess of my mind is possible.
Bringing it back to this week, we always appreciate it when you offer a weekly special for our viewers. So if you could clue us in on what we do have available and what they can get their hands on if they want to at this time and take advantage of these subsidized prices you just outlined us, that have been prepared for them. We've served up on a platter as this low pricing. So what's available?
So we're going to maintain the same special that we had last week, which were the 2021 Britannias at $3.75 over silver spot. Those are in stock, ready to go. Also, we had the 2021 silver Kangaroos at $3.95 over spot. Those are in stock and ready to go. And to that, we are going to add the 2021 Austrian Vienna Philharmonic, also at $3.95 over spot, in stock, ready to go. Any quantity on all three. Three of the major 6 mints of the world, brand new product in boxes of 500 on the Philharmonic and on the Britannia, tubes of 25 in the Britannia, tubes of 20 in the Philharmonic, and boxes of 250 and tubes of 25 on the Kangaroos. So whether you want a tube of 20 on the Philharmonics or 25 of the Britannia or the Kangaroos, or a full box, 500 on the Brits and on the Phils, 250 on the Kangaroos, we have them ready to go in stock. Premium-wise, silver price-wise, the best buying opportunity in 2021 and most of 2020, at least the second half of 2020 before silver shot up. And even before it shot up, we had rising premiums. Even when it fell down to $11, we paid 20 for silver. So I have a quick question to ask you, and you can answer it for me by telling the public where I'm going with this. What has happened every single time we've seen price smash downs to the premiums?
Oh, the premiums go up. The premiums fill the gap because it's like physical is still going to change hands at near the same price. That's
right, because you get more demand, and a lot of people, you and I have talked about the people who are waiting for that price.
Yep, the phone rings off the hook when the price goes down. Right, that's right.
And it's crazy. So then you end up running out of stock, and then you got to call the distributors. But everyone ran out of stock, and the distributors say, premiums are up, delays are up. It will happen. It will happen. And that's what's happened every single time. And it usually happens. I'm surprised we didn't get price increases today. If we see further weakness whatsoever, you can expect premiums to rise commensurate with the fall of the price of gold and silver. So, look, I think that the chances of that happening are extreme. And I think this is when you'll typically see it as we transition into the fall, usually right at Labor Day, you start to see greater interest. The people who are vacationing in Europe come back. There's greater movement in the price of metal. The people who are out vacationing at their cabin and enjoying summer come back. School just started here in Florida today. My kids are at school for the first day. So life is going back to that type of a routine. Let's hope it stays that way. And I would expect greater interest in the metals market, and also most likely rising premiums. These are the best premiums we have seen literally for a year, for sure, since July, or even, I don't remember, I think it was July when the price of silver took off. So best premiums we've seen in over a year.
Well, Andy, just really appreciate you joining us for this weekly market update. Folks, you'll see the reiteration of those specials in the description of this video. If you have any interest in those, the number to call us is there as well as in the video. Also, if you want to make sure you don't miss a single special or a single interview with Andy, please go to libertyandfinance.com. Over in the left-hand margin, put your name and email address, click submit. You'll get a confirmation request. Confirm that email and you're in. You'll get every interview we do with all of our guests, including Andy, and every weekly special will be listed there, as well as any links to articles or resources that any of our guests provide. It's all free. You don't want to miss out on that. libertyandfinance.com. Get on the email list. Andy Schectman, CEO of Miles Franklin Precious Metals, just always grateful for your presence here, and thanks for joining us again.
Look forward to seeing you next week, Dunning, and have a great week and safe travels. Stay well.
Thank you. This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.